Hey everybody, it's Jed Petty, founder of Rising Tide Financial, and I'm here with Tilly, who's taking a little break today. And I wanted to talk to you about a video I did, I think about 3 weeks ago, when the market was quite down, and I suggested what you should do, and I told you all that I'm gonna stand pat, and because you have no idea where the market's gonna go from one day to the next, I suggested that you all stand pat as well, and that your long-term asset allocation is really what's important. And here we are 3 weeks later, and the market seemingly has gone up every day for the last 3 weeks. And we're basically back to where we were before that guy in the White House announced all his tariffs. And the question might be, what do you do now? Well, again, if you have the right long-term asset allocation, then I would stand pat. Now, again, what do I mean by asset allocation? Well, I'm 60 years old, just turned 60 yesterday, as a matter of fact, and I have about 50% of my portfolio in stocks. The rest are in bonds, money markets, and some other things, a little bit of Bitcoin, a little bit of gold, nothing too dramatic. So 50% stocks is my long-term asset allocation. 3 weeks ago, I was probably down to something like 45% stocks. And I said I stood pat, but actually what I did was I bought a little more. Not a lot, but just to get me back up to that 50% range. And now, 3 weeks later, I'm probably at 55%. I'm gonna take a look later on today. And I might sell a little bit to get me back down to that 50% range. And when you do that, you sell into strength. We've had a good 3 weeks. And you buy during weakness. And that might seem counterintuitive, but it's exactly what you should do. And I'm not suggesting selling everything and buying everything. I'm talking about on the margins, buying a few percent to get you back up to that long-term asset allocation, or selling a few percent to get you back down to that long-term asset allocation. And if you do that, and you do that with a certain amount of rigor, you will tend to buy low and sell high, which is exactly what you should do. So the trick then is to figure out what is your long-term asset allocation, or what should it be? And that depends on your risk tolerance, your age, and what goals you're investing for. And I'd be more than happy to help you figure that out, or you can go to other sources to help figure that out. But what I suggest is figure out what your long-term asset allocation should be, and then rebalance to that asset allocation periodically. I actually wouldn't do it that frequently. I typically only do it maybe once every 6 months to a year, unless the market has taken pretty significant moves, and like it has over the last 8 or 9 weeks. So that's it. I hope you understand. If you have any questions, please reach out. If you have any other topics you'd like me to talk about, please reach out. You can find my website at risingtidefinancial.net. Thanks. Bye.